So probably moving on to the next biggest economy, which is Melbourne.
Yeah.
And an interesting sentiment in 2015 for Melbourne, I thought, because outside of the state, a lot of people were, I guess, thinking, don't go there because we hear a lot of stuff about oversupply. But that's kind of a generalised statement that we always try and avoid or unpack a bit further, because, of course, we're avoiding inner city apartments, which there are a lot of them, and we're avoiding greenfields estates. But I think there was two parts of Melbourne. Leafy East that really started to hit full value, and then the sort of inner west and inner northern, inner northwest of Melbourne, which still represents some good value.
Well, you've been in the market, so tell us about what you saw this year.
Yeah, well, you could still, if you went in 2015, you could still buy a land position close to the CBD, where people would go to the inner west. I'm talking, Yarravilles and Seddons and Newports, and where people are thinking the western suburbs used to be non-favoured, but I can now sort of look at the city and be 4Ks, 6Ks away. And if I go the same distance on the other side of the city, it's double plus 15 to 20%.
Yep.
So young professionals gentrifying these suburbs are just going, this is madness. Why don't I buy the old weatherboard and do my own renovation at the back, and my kids can grow up with other families doing the same thing? And I saw a lot of that. But I definitely think that there's three parts of Melbourne. Brand new, oversupplied Melbourne.
Yep.
Leafy east of Melbourne, which I think hit real value.
Yep.
But I still saw opportunity in 2015 in the inner west. And I still see a bit of that sort of moving forward in 2016.
I think if you look from an economic point of view, probably 2 or so years ago, I actually thought that Melbourne was running out of steam. But for whatever reason, we are
keep on
reinventing it. Yeah, we've reinvented ourselves economically a couple of times. We've obviously had it early on. We had the change of government, and that sort of said, and there were some really good projects that we should have done. The East-West Link is just a disaster, but it will be built, at some point in the future. And that's the type of infrastructure you really want to see in a big city, where corporations around the world are looking at relocating to Australia, and you make dumb decisions like that. That really annoys me. But coming back to the point around that economic activity, population growth is still strong. It's still very livable as a city, except for our congestion and probably poor transport infrastructure. But that will change over time, because I think the climate is starting to be recognised, even though we just don't have the storms that Brisbane and Sydney and those sort of places are having. And I think people will start to take those types of considerations in their buying interest as we go. So very talented group of people. Very smart, strong university based. And I think the story around the low Australian dollar is going to bring a lot more international students back in. If you look at the international student numbers, they dried up when the dollar pegged against the greenback, the US dollar. So I think once we see that coming back down, I think our universities will see the benefit of that. And I think even areas like Adelaide, we'll jump there in a minute, but areas like that are also potentially going to benefit as they put more money into trying to attract that international student.
It seems to get more consistency, as that major metropolis where it's got the breadth and the depth of industry, so it doesn't rely on anything, more so than Sydney, doesn't it? Because it seems to be a hell of a lot more cyclical in Sydney than Melbourne. It continues to be quite strong. So I think what's really important for our viewers here is a lot of the sentiment outside of the state is around apartments, but for us it's very specific about the apartments that we buy, or really rechanging the definition, because we'll buy the old-fashioned flats in the old 1970s blocks that don't have a pool, they don't have a caretaker, they don't have a lift, they've got a beautiful Victorian next door and a beautiful Edwardian on the other neighbour, and they're going to drive the price around those lifestyle locations. So it's important to get your definitions right, because flats and units, the old school definition, versus apartments, which kind of conjures up that brand new image, that's the stuff we're avoiding. But the older stuff in the quieter, leafy streets, they're still in demand.
They are, and we only need to then sort of say, okay, with scarcity, population growth, the villas, the townhouses, if the footprint of 3-bedroom or 4-bedroom duplexes, townhouses, and even the 2.5-bedroom flats, those types of places, I think, have got a real opportunity for buying opportunities in those markets. Again, we've got to be very selective, because we have seen some really strong growth in the Melbourne market, and that, from a point you still look at your numbers and you're analysing, you're thinking, are we done? And so for me, generally speaking, Melbourne's probably a watch as opposed to a buy, but we'll still cherry pick 40, 50 properties this year in Melbourne at some point. So, that's the type of opportunity you get in this type of market where, you're assessing across the market usually 500 or 1,000 properties a year. You're getting down to that granular, and we know the streets with the highest incomes. We know the sort of stuff. We've got our alerts, and that's what allows us to do that. But generally speaking, I think Melbourne will be a softer market in 2016.
I think it's a good point you said. Generally speaking, it's going to be more of a watch, but in specific pockets, markets within markets, I still think there's really good opportunity. But I think, for example, last year, when you talked about the 4-bedroom house earlier, we bought a 4-bedroom house in Newport, which is a inner 10-kilometre radius, about 7 k's from the Melbourne CBD. That stuff is going to get scarcer and scarcer and scarcer. So again, being selective, as you mentioned, but Melbourne en masse. Probably really you need to know what you're looking for in Melbourne. But there is some opportunity.
Rural Victoria.
Yeah, well, I mean, you like the I guess the regional areas close to the border, don't you? But I think it's a little bit away from being in there en masse. So
it's definitely very selective. We're talking Albury or Wodonga. You will look, maybe one a year or two a year that just scream out as a strong buy. In terms of our commutes from town, we bought a lot of properties in Ballarat in that area around that sort of 2010, 2012 mark. But for me, it's just there's not enough signs of strong growth. Melbourne is still the employment hub that people want. There might be some opportunities along the peninsula, the sort of Geelong areas and those types of things. But especially with that direct train, that will sort of see us putting some rulers over on some of the scarcer type assets, the period type assets down in those marketplaces, because it is a city within its own right. Small city at that on global terms, but a city within its own right. So again, if the opportunity presents itself, but I'm not sort of everything on black for Geelong or everything on black for Ballarat or those types of areas. You might get the odd opportunity, but I'd be more hesitant than confident.
I think in 2016, based on the sentiment and where we're at, I think the safety of a capital city job market isn't a bad thing moving forward. So for me, I'm not looking at anything in regional.
Because we should acknowledge that those areas had good growth.
Yeah.
So the reason why we're not so bullish on them is because the clients who we bought for did terrific, but it's plateaued. And that's the point we're sort of making. So we're watching the availability because there was a lot of new construction being built there. So vacancy rates are rising. And really for regional markets, you need tight vacancy rates for growth. It's as simple as that. So if you don't have those, and so we got in nice, we got some really smart yields, values went higher, our clients high-fived us and we moved on. And that's what you need to do to be a borderless investor.
We get a lot of self-managed super fund clients who want to pick Melbourne specifically because they're putting in large cash deposits. They're not accessing it for 20 years, and they see that the population in Melbourne is tipped to be more popular than Sydney over time. So again, tailoring the advice for the individual circumstances, but as a general sentiment, be fair to say, be cautious in Melbourne. Yeah.